big three time, three stocks, three charts, three trades. Then Lichtenstein will take us through the charts. Here to take us through the trades, Don Kaufman, co-founder of TheoTrade. Great to see you both. Before we go through some trading ideas, just Don, as we wrap up 2023, and you've been on with us a lot, we're so thankful that you've been on with us so much, a good look at the big three all the time. But what's the big picture and takeaway from 2023, and maybe spin it forward to 2024?
Sure. Ultimately, 2023 has effectively been big tech. It's all about big tech and the Magnificent Seven. Really, the last couple of weeks that we've seen in 2023, yes, they've been buying other things like, financials to eke out some returns. But 2024, very, very different year. And it's going to be the year of questioning the Fed and ultimately some wild moves inside of interest rates, which could really wreak havoc on the entire marketplace.
Yeah, there was concern about, the fact that the volatility index came down so much, and that that could actually be indicating that people are becoming a little too complacent, and that worries folks. In the meantime, let's get to some ideas. We look at a name like Baidu and we think about some of the Chinese stocks. Do you think that this is a good one for a longer term play either way?
Yeah, so I'm looking right now at some bullish positions inside of some Chinese large caps, and I'm looking at these bullish positions because every time we continue to slip just a little bit in some of the Chinese kind of larger market caps, China steps in and stimulates their economy, and Baidu is really no different. So this is not just taking a shot at Baidu or taking a shot looking at the technicals of Baidu, but it's really taking a shot on the Chinese government coming in and continue to, stimulus measure after stimulus measure. With that, I'm creating a bit of a bullish position as Baidu has been relatively range bound from 100 about 150. It's a big range, but we are towards the lower edge of that range. This trade is all the way out, though, to the February 16th expiration. Plenty of time for this to play out. I am buying the 125 calls, selling the 135 calls. So it's a $10 wide spread for a $1.84 debit. So plenty of upside potential in this underlying.
All right, and then I'll go out to February. Ben, your thoughts on the Baidu chart?
Well, Don mentioned tech was a theme this year, that's for sure, Nicole. Also a theme this year, was me pushing back on some of Don's expectations throughout the year. In addition to that, China, another theme, right? And lack of enthusiasm for some of the individual names and some of the stocks. And Baidu is a perfect example of all of that, I think, in many ways. So let's begin with how shares of BIDU have not given the bulls much to cheer into the end of the year, and unfortunately, I think a little bit of a bearish pattern setting up into the beginning of the year. But first and foremost, the rally that we saw from 106 up to 126, end of November, middle of November, all the way up into the beginning of October, it was a bullish pattern to say the least here. Now, along the way up, we did see some areas of consolidation that formed at higher and higher levels, right? We were watching a trend environment to the upside play out, but look what happened. We lost that conviction to the upside into the beginning of November, and since it's just been somewhat range bound, as Don mentioned, not a lot of conviction. Now, this move that we just recently saw up to 126, I want to show you why it's got me a little bit concerned. The fact that, here it is, 126, stalling out, coming off that level. Look, it was testing a key area that we had found a support in the past, right? Prior to breaking down into the lows this fall, retesting that area could possibly be in this continuation pattern where we're seeing a series of lower highs come into play here. Again, open up the door to the downside, take out those October lows below 103, could see some energy to the downside. Let me show you what's going on with the 50, the 200-day moving average, because it's a pretty good example of a stock that's struggling, right? You can see how we've tested the 200 a couple times. We've been below it since October. Retested the 50-day moving average, recently failed. That was that move up to 126, so we're back below that. Look at RSI, not really providing a lot of conviction either way, but again, the range Don was talking about, unfortunately for me, Nicole, this one looks like it's still struggling to recover here, much like, again, some of those other themes that we've been talking about throughout this year. Stock is currently down 2% year to date.
All right. Well, and that's the big picture. And do you think that the story is for other Chinese stocks as well? Or is this more of a Baidu type of story, Don?
Yeah, no, I think Ben has to have a little bit more faith in the Chinese government and their ability to stimulate their economy, or at least create a bid to the marketplace simply by throwing capital at the market, which is exactly what they've done time and again. So I've actually watched, some of these range bound. They hit the lower edge of the range. Chinese government comes in, stimulates the economy, and away we go. And that's all that I'm really looking for in this particular position. Giving myself, though, a little bit more time for that to effectively play out.
Yeah, understood. And then we take a look at the Treasury ETF, TLT, and it's interesting because towards the end of the year, you saw Treasury yields dropping, right? The 10-year went from 5% to less than 4%, 100 basis points pretty quickly. And meantime, we've had the Fed with all those hikes. So at this point now, what's the bet on the TLT Treasury ETF?
So this is a really tough one for me kind of internally, because I always grew up as kind of a efficient market hypothesis, and that's basically, the market's right. But when I look at Fed fund futures, I have got to fight that internally. I mean, I look at the Fed fund futures and they think their cut is coming in March, all but assured, okay, by the May timeframe. And I'm telling you right now, I don't see it. And some of the Fed speak around this is kind of corroborating that story that, some of the Fed, they're looking at maybe second half of 2024 in a cut. So I'm going to take the other side of the bond market. I'm going to look for the TLT to sell back off, for rates to go back up when the marketplace is disillusioned that rate cuts are not necessarily coming in the first half of 2024. This position is all the way out to the March 15th expiration. And I'm picking March 15th because, again, plenty of time, right? So I'm going to buy the 96 puts. I'm going to sell the 91 puts, and I'm going to do this for $1.10 debit. It is absolutely a bearish take on TLT, which has just been exploding, if you will, to the upside. I think people are going to be disappointed that those rate cuts are not coming quite as fast as they assume.
And how about the market pricing in a total of 1.5 percentage points of cuts by the end of 2024? I mean, the Fed's sort of putting out 3 being likely. They're saying 6 or 7. The market certainly has a lot of enthusiasm about a lot of cuts to come. Ben, your thoughts on the TLT Treasury Bond ETF chart?
Nicole, the rate debate was a heated one in 2023, that's for sure. And I think it's going to continue to be the case, and into 2024, that theme will play throughout. Let me show you why as we get into the bigger picture. But first and foremost, the move up that we saw in TLT, an impressive one this fall, that really caught a lot of attention, right? To your point, the yields came off from 5% down to 4%. And here you can see TLT in the end of October was around 81, 82, and the rally we saw all the way up to just shy of 100. A very well-defined trend, bottom left, top right. We always talk about that. I actually want to step away from this move off those end of October, beginning of November lows and show you where this put us on the bigger picture, because this move here from, again, 81, 82 back to 100, well, reversed this longer-term trend that we had been into the downside. Take a look here as you go back to the top left corner of this chart. Back in April, if you remember, TLT was up around 108. Then we balanced around 106. You can see these areas of consolidation that formed at lower and lower levels. And again, as we were balancing around 95, the bears wanted to see us break down, form a new area balance at a lower level. We did around 86. And at that time, they wanted to see that kind of wash, rinse, repeat type pattern that had been playing out continue. In fact, look what happened. We actually rallied back above 95 here, invalidated that trend to the downside, and want to show you why I think that debate's going to continue, because while we're seeing some strength here back to this 100, 101 level, let me show you. This is a key area here right now, because again, on this longer term chart here, you're going to see a continuation of this pattern where value's been moving at lower and lower levels. This move off this balance area around 86 comes into a key area right now to keep an eye on into the new year. Still a longer term trend to the downside, but potentially reversing should we get above that right now, Nicole. Definitely watching the 100, 101 area.
All right. Any final thoughts there, or should we move on to the world of housing? Don, I'll let you add in if you want to add something in, but as we turn to housing, yeah, go ahead. Tell us your thoughts on that one.
I got plenty of thoughts when it comes to like rates. I mean, look, the marketplace right now is literally pricing in a cut, at least 25 basis points, almost every single meeting of 2024. It just seems insane at this point in time. I mean, the economy would have to be absolutely tanking. Is the marketplace telling us something about, the economic forecast? And it's a big question, because if that's true, they're going to be cutting to basically prop the economy back up. And that's something that the retail trader needs to be thinking about.
Yeah, and as we talk about rates, that's what's really one of the things that at the end had been driving some of the home builders and some sentiment as the Fed paused again for the third time. Sentiment improved, then people started betting on cuts. And when you look at a name like Toll Brothers, which is the one you're featuring today, and was hitting 52-week highs at the end of the year, your thoughts on Toll Brothers?
Yeah, to begin with, Toll Brothers is up 100% on a year-to-date basis, which if you had asked me at the beginning of 2023 with the rate hikes, of course, everybody would say that's absolutely, again, it's ludicrous to think that the stock would actually be up 100%. Whatever happened to higher rates for longer? And we've completely wiped the slate clean. But again, Toll Brothers coming into early next year, again, I think there's going to be a lot of this rate discussion. It's going to put some nerves into the home builders. Specifically, Toll Brothers is kind of the leader of the pack. And I would expect some degree of a pullback in a stock that, in my opinion, has gone too far too fast. March 15th expiration, once again, giving myself some duration here. Buying the 95 puts, selling the 85 puts. It's a full-fledged $10 wide spread in this underlying. This is done for a $2 debit.
Yeah, it's interesting because as mortgage rates dipped and stocks took off, and even the XHB, another one, was at 52-week highs at the end of 2023. The question is, where is it headed? Ben, you take a look here, because we certainly came off the mortgage rate highs and there was some optimism, but you still have very costly homes. It's not like there's a ton of bargains. I mean, year over year, homes are still expensive.
Yeah, Nicole, one thing, Don and I have rarely agreed across the board, or disagreed for that matter, across the board in the segment here this year on the big three, but this is going to kind of fit in line with that, right? That's what makes a market in many ways, kind of seeing things through different time frames or different lenses. And in this instance, I still see trend up, a lot of strength in this name. Let's first and foremost begin with the 30-minute candle chart and the move that we saw this fall, much like the broader market enjoying gains here. We're talking about off the October lows here around 67 all the way up to 105 with conviction, and not only conviction, Nicole, but areas of consolidation that have formed at higher and higher levels along the way up. So that footprint that the market leaves us, that staircase type pattern, however you want to describe it, bottom left to top right, value is moving higher. Tough to debate that one at this point. And again, this is a 30-minute candle chart here. Looks like we're balancing possibly around this 100 area, but it's very bullish as long as we hold above 92. Again, a 30-minute candle chart here. So now let's not give too much credit to this one. Let's step back here where you can start to see a very identical and similar pattern, right? We're just distancing ourselves time frame wise, adding a little bit more on. Daily candles going all the way back to June of 2022 when the stock was trading around 39. Again, similar pattern. Value moving to the upside, well defined. Bottom left, top right, a few different ways of describing it, but it has a very similar depiction, right? That staircase type pattern where we see value and a migration of value to the upside. So still in a bullish pattern here is the way I see things. I want to step away from this daily candle chart, bring in the moving averages so we can see where we are. We've been holding above them for a while now, for the most part, aside from a couple tests throughout the year. Got RSI, look at this, very bullish right now, supportive of this vertical move we're seeing to the upside. Potentially we start to balance here considering the nature of the price activity through 90 into this 100 level, but this one's got some momentum into the end of the year here, Nicole, and exactly what the bulls are looking for, building on gains that we saw throughout the year. That's shares of TOL currently trading and holding above 100.
Yeah, exciting big three. Don, final thoughts here.
Yeah, no, you know what? I kind of enjoy it when Ben's taking the other side over here. As he said, that's exactly what makes a marketplace. Look, some turbulence coming in early 2024. Expect it. This rate cut debate is far from over right now. I think the market's going to be rather surprised when it's not getting what it wants.
All right, John Kaufman of Theo Trade, and of course our own Ben Lichtenstein on the charts for the big three. Thank you both.